In the cement space, though, Nuvoco Vistas, they have won the bid to acquire Vadraj cement in the insolvency resolution process. To help us out with how things are shaping up, few details on this particular acquisition and the way ahead, we're joined by Mr. Jayakumar Krishnaswamy, the Managing Director at Nuvoco Vistas Corporation. Well, thanks a lot, sir, for joining in. Good speaking to you, and it's been a while since you joined in. So let's get straight to the point, Mr. Jayakumar. What is the tentative deal size of this particular acquisition? And also, you'll have to incur some capex since this plant was shut. How much is that?
Okay, Vadraj Cement has two plants in Gujarat. It has got an integrated clinker unit in Kutch for 3.5 million tons of clinker. And it has got a grinding unit in Surat with 3 VRMs. So the installed capacity of the grinding unit is 6 million tons and the clinker unit is 3.5 million tons. So this came through the IBC process. And we bidded for it sometime in the month of May and June. And the bidding process happened during the Q3. And finally, yesterday, the letter of intent was received. So the deal costed us 1,800 crores for the assets. And on top of it, we have done a complete due diligence of the sites and have a technical estimate of how much it will cost to rebuild both the sites. Both of them have got well-established equipment, just that these equipments have not been in service for the last 4 years. So it will cost us approximately 1,000 to 1,200 crores. Overall, we are looking at 60 to 65 US dollars per.
Okay, all right. But how are you going to fund this particular deal? It is in excess of around 4,000 crores odd of as of last count.
So in all our quarterly earnings call, I have been mentioning that around FY23, Q25, Q4 or Q1 FY26, we will start our next phase of expansion when the debt levels of the company are thereabouts 3,500 to 4,000 crores. And as we progress this year and end this year, we will be around that kind of debt levels for the company. So how do we fund this deal going forward? We still have got 6 to 9 months when the NCLT approval takes place. We're currently under the process of working out a funding mechanism through which we will fund this deal. One of the things we are very clear is we will have to ensure that the leverage on the Nuvoco balance sheet is appropriate, and we will meet all the covenant conditions when the deal is consummated.
Mr. Jayakumar, I'll have to push you a little bit more. Give us a breakup with regard to the funding, since you're already going to be taking on close to 1,800 crores of debt from this acquisition. So give us a breakup on the funding.
Currently, we have a business which delivers close to about 19-20 million tons, and the current pricing and profitability levels, Q4 and then beyond looks when the overall price stability happens and the overall profitability of the business improves. And our confidence level says that we would have adequate internal accruals to fund the capex program of this deal.
Okay, all right. So we'll have to wait by to see how much of it will be internal accruals. But let's get a basic point out of the way. Your current debt is around 4.3 thousand crores, very, very roughly. Given that you're going to be taking on some debt, what will the peak net debt level look like for the company?
No, I can answer this question simply by the fact that in the last 2 to 3 years, quarter on quarter, our debt levels have been pared down when compared to the previous year's number. And as I stand at the end of Q3 and beginning of Q4, I'm looking at a number which I have made informed during the earnings call. So at this kind of numbers, it's very difficult for me to kind of project a peak level debt at this point of time, because the peak level debt is a function of the profitability of the industry as well as the overall demand scenario. But sitting here, I can, looking at the last 6 to 8 weeks of how the demand has progressed and how the pricing is shaped up in the industry, I'm pretty confident that as we traverse Q4 and well into FY26, the overall profitability of our business will improve and we'll have adequate internal accruals to fund this deal.
Profitability will improve. You know, the reason I'm asking you about the debt is because the street would like you to keep your leverage under check. But let's focus on the equity side of things. Is it possible that you raise some equity to fund this deal?
I won't be able to comment on the instrument of funding in this deal, but we still have 6 months. We are cognizant of the fact that we have to ensure that the balance sheet of Nuvoco is steady and we meet all the covenant conditions. And within the framework of all the covenant conditions, we will be doing the fundraise for this deal.
Okay, so the funding is still a little bit sketchy, but let's focus on what could the synergy benefits be. Since you already have exposure to the region, you must be having some kind of synergy benefits that you're factoring in. Could you tell us what could that quantum be in that particular region, that's North and West?
Vadraj comes us with two distinct advantages. One of the principal advantage for Vadraj exploration was to get into an area where we are not present, which is namely Gujarat, Western Maharashtra and Western MP. So this gives us access to new markets. So, and makes this company from largely an East-centric company to a East, North and West-centric company, which will take us our capacity from 19 million tons in East, another 6 million tons in North. Overall, we've got 25 million tons of capacity right now. Another 6 million tons in West will take us to 31 million tons. So the primary objective of the deal was to fund the growth engine of the company going forward. However, with our current sourcing model of Gujarat as well as Northwest Maharashtra and Western MP, this markets are serviced from a Chittorgarh plant. And then once we have this Vadraj asset with clinker in Kutch and grinding unit in Surat, we are looking at synergy benefits in logistics as well as the inbound freight, whereas we targeting to unlock close to about 100 to 150 rupees per ton in the overall cost base of the company servicing these markets.
Okay, 100 to 150 rupees of cost synergies in North and West region. Got that. Let's get an industry-wide perspective for you. Do you believe that cement prices have bottomed out from the multi-year lows? And have you taken some price increases in the recent past?
If we had this conversation probably 2 months ago, I would have presented a gloom and doom scenario with prices really going down, and certainly bottomed out in October and November. But I think come December, we've had price increases. We took price increases in East as well as in North markets, and albeit not very big price increase, but we have indeed taken price increase in all the key markets in East as well as in North. And this number should hold good in January and beyond. And with this kind of improved numbers, it will shore up the overall performance of the entire industry and certainly for Nuvoco. I'm only targeting with better mix of premiumization and geo mix and focusing on key markets, we can unlock a little bit more value for the organization. Overall pricing, as you asked, is my view is bottomed out this fiscal. And from now on, I think certainly pricing should improve and overall improvement in the results of the entire industry should happen going forward.
Got that, Mr. Jayakumar, but we need to ask you this final question before we let you go. There was some part of the market that was expecting a bit of a sellout from Nuvoco's promoters. Could you clarify and clear the air on this point? Is Nuvoco on the block?
I think, how could I answer a question like that? The fact that we have demonstrated that we have an appetite for growth and we have cemented our leadership position in the market, and we are now continue to be a fifth largest cement company, moving our capacity from 19 to 25 to 31. It speaks very high of our commitment to stay in this industry and grow the market.
We appreciate you joining in, Mr. Jayakumar, and clearing the air on that front. So since you're focusing on growth and expansion, you're clarifying that Nuvoco is not on the block. Congratulations on this Vadraj cement acquisition, and we'll hold you to some of those numbers. But the other big takeaway for the industry perspective is he believes that pricing has bottomed out and things should look up from here on.
Okay, all right. That's an interesting chat with the Nuvoco management after a while. Let's just look at the Nifty